Hi guys, let's take a look at Tuesday the 25th of June. So we've had a fair bit of a sell-off from Monday leading into that, and got our low here, which was from our largest swing. From this 4-hour swing here, has hit that 3.5 standard deviation. So we go down to the 5 minute, and let's have a look. We'll start with Asia again. Had our New York PM low here, which sort of got swept straight away. Come through. New day opening gap here. Come back and retested, and then just pushed up until Q2 in Asia. There is a change in state of delivery here in Q2. The move down there as well. So if we grab that whole swing, select that as our deviation measurement. We've got our 1.5 standard deviation retracement coming here into Q3. So then we've got our Q3 manipulation, which has our change in state of delivery here. Had that. It's then flipped the new day opening gap. Some displacement in here, and then continued up. I did miss this move. I wanted it to come back down. Come back down, retest. Like this. Give us an entry here, and then shoot up. So it's then shot straight up 1.5 standard deviations for Q3. Q4 continuation. This becomes then our Asia high here. So we've done our 2 standard deviations in Q4, not quite reaching the 2.5. Creating all these equal highs here. A bit of time distortion here, or creating liquidity. And then that gets taken for London Q1. And our push up. So we've taken Asia high here. Hit the 3 times standard deviation. Similar to Friday, I was looking for it to come a little bit higher into that 3.5 by 4, and ideally wanted similar setup, but it's left me behind there. So we've got our change in state delivery here. So that 5-minute down candle that caused the manipulation push up. We're above Asia high, so we can then measure this swing here. I've got our 4 standard deviations down here. So then expanded straight down. So we've got change in state of delivery. We've got our displacement down. Here's our optimal trade entry, plus the CIBI comes back and then just nukes straight from there. I still didn't enter here for the reason I still thought it might have just swung this high again and then come down, which is what we talked about last time as well. Q2 high gets swept and then goes down. It would have given us a 3.5 to 4 standard deviation, and it was optimal trade entry of the higher swing. So from here, measured down to here, we go right down. I was looking at that 705 as well, whereas back here, this was just an OTE of this swing from here to here. So just move that out of the way at the moment. So we'd come back, we're only just above 0.5 here of that swing. So then I've just watched this pretty much nuke all the way down without getting a trade for that. And then a lot like Friday, which was a little bit annoying. So the draw after this was Asia low, and then it's come down to that previous day low. And then done a turtle soup, and then it's just pushed off without giving much retracement or entry conditions. So change in state delivery here. This is the high that made the low that took the liquidity. We can then measure that, and then we've got it's gone straight to 2, not quite 2.5, and that's our reaccumulation zone, and then it shot up again. Q4 all the way to 4 standard deviations. A bit of time distortion in here again, which was similar to what we saw in Asia here. Q4 into Q1, and then it shoots up. Very similar price action to this, just in the New York session. A little breakdown here, takes out all the liquidity from these lows, takes out this low, comes back in Q2 open, so that's our true market session open, TMSO, and we're looking here for continuation. So we've got our manipulation swing down, takes out a Q2 low. So the opposite of this is what I was looking for in London, where we wanted that Q2 high, comes back, takes it out, and then nukes down. So this has done the same thing for New York. Q2 low, takes it out, comes back up. So this isn't a change in state of delivery until this candle is closed above the high that made the low. There was some nice 1 minute structure in this though, and we had 10 o'clock news, which played this candle out nicely here. So from there, we've come back out, taken that New York PM high. That was our next liquidity level. Done our 1 standard deviation, still in Q3, retraced. I didn't check if that was an OTE, not quite. So it's just done. We've just got this BISI here. So this gap, it's come back to the C of the BISI and then continued up straight to the 2 standard deviations, which we then got reaccumulation again. So this big sell-off right at lunchtime. Back to your optimal trade entry again from this low to this high. That's our OTE of that swing. And then continuation up to 2.5 standard deviations just to finish off the day there. And then this is going into the next day. So nice market maker buy model. So as soon as we come up here, we've then just got a consistent uptrend all the way to 2.5. We don't fight the trend, look for those optimal trade entries within those times, manipulations, and then try and get on board from there. Well, that's all I've got for you today. I hope that helps. Any questions, always just shoot us a message. Thanks, guys. Bye.